My name is Alric Lindsay, and I act as an independent director for Cayman Funds. Since Japanese investors frequently utilize Cayman structures, I attended the events during Japan Weeks in October 2025 to gain insights on the evolving asset management sector in Japan. As an initial observation, Japan is experiencing a surge in corporate governance reforms driven by the Tokyo Stock Exchange, the Government Pension Investment Fund, GPIF, and the Financial Services Agency, FSA, which will encourage companies to place more emphasis on increasing shareholder value, a classic precondition for rising M&A activity. Cross-border inbound M&A activity is expected to accelerate because tremendous interest from abroad in Japan is repeatedly highlighted as a direct result of the governance reforms. Private equity deal flow is rising fast. Japan's share of Asia-Pacific private equity and venture capital investments jumped from 10.6% to 15.6% in just 1 year, with much of that growth coming from buyouts and take-private transactions. Based on the feedback received during Japan Weeks, it is believed that corporate Japan may now be under real pressure to sell non-core assets or entire underperforming listed subsidiaries, a trend almost absent 5 years ago. The alignment of the government, regulator, pension funds, and the stock exchange is deliberately designed to unlock capital, and M&A activity is one of the clearest ways that capital is now moving. These changes make Japan one of the most attractive M&A markets in Asia right now. Next, the changes in the rules for NISA accounts have been a game changer, leading to assets flowing into these accounts. Now, 1 in 4 Japanese is believed to have a NISA account, marking a phenomenal success in encouraging retail investment. Retail investors are also moving from cash to global stocks and alternatives. Trillions of dollars are waiting to flow into alternatives. Additionally, the Government Pension Investment Fund has a cap at 5% for alternatives, but actual allocations in early 2025 were only around 1.6%. Therefore, there is room for further pension allocations into alternatives. Turning to the digital space, digital assets and stablecoins are gaining traction, with the first JPY stablecoin being recently launched. AI is revolutionizing the sector. From investment decisions to back office operations, firms are using AI as assistants to analyze markets, generate reports, and even build trust in partnerships, but the human element remains key. For foreign managers seeking to enter Japan, the feedback on the ground is that foreign managers succeed only with long-term, relationship-first approach. The transactional type approach doesn't win in Tokyo. Once relationships are established, there's strong commitment. If you wish to learn more, I would encourage you to reach out to leading law and accounting firms for guidance. Japan is awake, reforming, and hungry. Get in now.